Every day, new buyers are coming into the market. And if your home's not there, then you're potentially missing those buyers. If you want to sell it this in 2026, you don't need to wait until March or April. You want it listed right away. It's December. We've got a jam-packed video for you. We are talking about where Austin ranks amongst most wealthy cities for millennials. We're going to talk about what we see happening with the market going into the new year, giving you our projections. And we have a surprising number on what the average price for the city did last month. So we're going to get into all that and more. My colleague Lee Abraham and myself, we're real estate agents here in Austin, Texas. If you are thinking about buying or selling and you want to chat about that, we'd love to hear about your goals. Go ahead and reach out to us. Our info's below, and we'll chat with you more. As usual, you can find us back here. realestatevideohub.com brings you right to our YouTube channel. And we're kicking off this month with an article that Lee came across talking about the top 10 millennial wealth hotspots. And look at that. Top ranked metro is Austin, Texas, ranked number 1. If we scroll down, you can see Austin, Round Rock, San Marcos, number 1, a couple of the different metrics they're using to come up with this. Lee, what was your takeaway here?
Well, number 1, it's a net positive, a contributor to the forecast for Austin's economic health and growth. I thought that the angle on the article was very interesting. This was created by someone who's an expert in trusts and wills. And so the idea, the context is the wealth transfer, the generational transition plans, succession planning, and the transfer of wealth. And basically it's saying that Austin is very well placed as the generational wealth transfer unfolds. Because this is just a hot spot for people like yourself, David, young, successful, the type of folks that you want driving your economy, whether it be from a tech standpoint, the education angle, the family, all of those things. It just bodes well. And I thought, why not share some good news here on our final report of the year?
Yeah, we're starting to see more of these. I remember 2011, I don't know when they started, but sometime between 2011 and 2021, these types of reports, it felt like they came out a new one every month. Austin, number 1 place to live. Austin, number 1, whatever. There was tons of these types of reports. And over the last 3 years, those have subsided, and there's been some, biggest bust market. Austin, Texas is kind of what's replaced it. And I think this is a good indicator that we're starting to get back to the positive articles. And when I think through, what happened with Austin, because there are parts of the country that are still hot, the Northeast, maybe the Midwest, and Austin has kind of been the epitome of, a bust. And I use that in air quotes because I don't think there was really a bust here. There was like some air was let out of the balloon, and things kind of came down with pricing a little bit. Depends how you look at it. We're certainly pricing's down from the all-time highs, although we've seen some pretty good stability there. Transactions are down phenomenally, which we've talked about on this report over and over again. I just think we pulled ahead too much demand. Like, there was so much positive talk, but the story in Austin has not changed. If you look back to what made it such a great place for people to move and live from 2011 to 2021, none of that has changed. Still has good employment prospects. We still have top universities here that are driving young people starting their careers here, and lots of talent. It still has a lower cost of living. And actually, while some other cities saw their rents continue to increase, Austin saw some of the largest rent decreases, which it's not great for landlords, for those of us that own property, and we felt that pain a little bit. But for our economy, that's a good thing, to get people that are young with making it more affordable for them to live here. And we've actually done a really good job, unlike other parts of the country. A lot of our peer cities like New York, San Jose, San Francisco, Los Angeles, where it's really hard to build, it's been much easier to build here. And you've seen that in the number of the housing that's gone up. The 3-home initiative, it's called the home initiative, where you put 3 units on one lot. We're starting to see those pop up. And that's pretty exciting, because that's what they call slow density. It's not like you just rezone the whole city and just say, like Houston, you can build whatever you want anywhere. It's like, hey, instead of 2 homes, now you can do 3, right? It's not going to change the fabric of our neighborhoods and our communities overnight, but it's going to slowly allow density to build. So there's a lot of positives here on why Austin's going to continue its trajectory. And if you go back, we did a video called "The Trend Lines Don't Lie," and if you go watch that one, we'll link it below. That's a good to show you kind of how we pulled demand ahead, and I think we're getting back to that trend line. So here we have the number of active listings, and that continues to drop from last month, kind of in our seasonal pattern here.
Yeah, so the large drop in active listings that was on the previous chart, we started the month of December with 2,559 active listings. So that in itself doesn't mean a whole lot other than in context of how fast are these homes selling. And so that's what we have, the number of sales per month in the right column on that chart on the left. The 30-day pending number is the one I like to refer to as it's the most current, 575 pending sales over the past 30 days. When you divide that velocity into the 2,500 plus listings, we're at about a 4.5 month housing inventory. So the housing inventory monthly metric is meaningful because it's basically the indicator of supply and demand. Balanced market typically is defined as a 6 to 6.5 month housing inventory. This is significantly below that. So once again, and this has been an ongoing story, sure doesn't feel like a seller's market for a lot of people, but when you run the numbers, it clearly is. And so it's interesting, David, we've had quite a bit of activity on some of our listings over the past month that really, in my experience, is showing a significant jump in the velocity of our market. And I think that this dynamic clearly reflects the low number of active listings more so than the speed. But I have a feeling that we're going to see some really robust numbers coming up in the first quarter that should keep this monthly housing inventory roughly in the same range where we're at now. But I think it's going to feel a little bit more like a seller's market because the volume is going to go up.
Yeah, to your point about multiple or lots of activity, we had multiple offers on a listing in 78704, around the Zilker neighborhood. That was a couple weeks ago. That deal actually closed, so maybe a month ago. We've got a lot of activity on something in South Austin. So there's pockets where things are, great homes, priced right, where there is lots of activity and sometimes even multiple offers. So it just depends. It's about pricing the property correctly, having the right marketing in place. And again, if you have questions on that, reach out to us. We'd love to chat with you about how we can help you get your home sold, or if you're looking to buy, just talk through all of that. So I'll advance this so you can see how this looks over time. And so it looks like we're leveling off in this range here because it's been pretty between 4.3 and 4.6 for 1, 2, 3, 4 months now.
Right. Just hovering in the same range. It'll be interesting to see. Typically, this number will drop through the new year, kind of ticked up just a little bit compared to last month. So interesting little number there. But the real takeaway is just the floor, that 4.5 floor over the past, 7, 8 months on the housing inventory, significantly higher than it's been over the past few years where the floor has been below 3.
Mm-hmm. Yeah, so that's the floor here. So we're looking at November, December, right? It was 4 and then 3.7, so it's slightly higher. If we go back November, December, it was 5 and 4.6, so a little bit lower. So, and then this is going into the new year. You can see it drops. That's what we would anticipate here as we go into the new year, as it drops. And what I've seen every year, January, there's always a pop. I just always say it's people set their New Year's resolutions. Like, I didn't buy a house last year. I was hoping to. It's going to be this year. And then in January, people get out there after a slow holiday season, because we always see a slow down in this time of year, and then it picks back up in January. So we anticipate that nothing will be different this year. And in fact, unlike the last couple of years, we might be having some lower interest rates, hopefully, and that might also push some demand. So we anticipate it's going to be a much different start to the year than it has been over the last couple months. So with more activity. So if you're thinking about selling, I think being prepped and ready to have your home on the market the beginning of the year is really, really important. Some people talk about, oh, you got to be on the market in March or April. That's the ideal time. If you look at last year, that wasn't true. And the important thing about selling a home is that every day new buyers are coming into the market. And if your home's not there listed, then you're potentially missing those buyers. So you don't want to wait. If you want to sell this in 2026, you don't need to wait until March or April to list your home. You want it listed right away. That's our advice. Fortunately for you, we think we're right. And fortunately for you, there's only a small portion of our market are watching our videos. So you have the inside scoop. If you're watching this, share it with some friends that you like. Give the video a like for us. That helps other people find it. So, and reach out to us. All right, let's keep moving. So number of sales per month, down 4% year over year, 18% month over month. And this is that stat that is really the big difference between previous years and this slowdown since 2022. You can see this 500 sales number just consistently low. If you look at the trend lines don't lie video, you'll kind of see where we should be. And this is the biggest thing that's going to change as rates come down and that lock-in effect. This is because of the lock-in effect. So many people have those sub 4% mortgages they don't want to give up. Lee, you have any additional thoughts on this slide?
Not so much on the number of sales per month. I think we've kind of covered that, but I do agree that this will be the most dynamic stat in terms of a delta between 25 and hopefully in 26 going forward.
Yeah, it would be good for everybody. Everybody wants to see the market pick up and the number of transactions. That means people are able to be more mobile. If you have a job opportunity in another city or even just another part of town, you don't want to have an hour-long commute. You want to be able to move. It's good if you have more mobility. And so that's what we hope for our market.
So David, the average sale price, as I was putting the stats together, this is the only one that kind of surprised me. And so as I take a look at the average sale price, these are single family homes in the city of Austin, pretty significant drop down to 758,000. That's compared to 835,000 last month and 815,000 last year at this time. Last month when we reported the average sale price for October, it was the highest October sales price on record. And based on all our numbers with, a little bit of strong demand relative to the low supply, kind of felt like we'd be over 800,000 anyway on the average sale price. So be interesting to kind of parse through this particular number, see if there was a significant volume at a lower price segment that kind of moved that average around. So I'm very interested to see how the numbers for December will come out and where we're going to be as we wrap up the year. But I was a little bit surprised that the average was down.
Yeah, we certainly don't want to make any conclusions based off of 1 month of data, but it's not uncommon if you look back at previous years for it to drop from October to November, right? Case in 23, in 22, 2021 it went up. 2021 was the most booming year in real estate history, so that's not too much of a surprise. And then in 2020 it had gone down from October to November. So it's interesting if you look, where does that land? It's back to about 2021 prices. So certainly well above 2020 prices still. So just to put that in perspective. So interesting. Yeah, again, curious where December lands and more importantly, what we start seeing in the spring. So we won't make any conclusions on this yet. Days to sell up month over month, down year over year. So, nothing too big on this number. But I think the important thing on that stat, if I can go back, can I go back? Nope, going the wrong way. Is that if you're in this market and you're expecting your home to sell in a week, maybe you're still thinking things are like 2021 or early 2022, you're going to have to wait a couple months to sell your home, most likely. So just keep that in mind.
So the sale price list price ratio down a little bit year over year, up a tiny bit month over month, basically stable, hovering at about 96 and a half, give or take. So this is kind of in alignment with everything else we've seen, kind of supply and demand both down, but balancing each other out. And nothing really to make of this stat, David.
New listings down year over year, down month to month. Yeah, wow, big drop off. Why do we think? What are your thoughts here, Lee?
Well, last month when we were looking at that 1,000 plus, that was a pretty big number relative to kind of what we were forecasting. So I don't know. I think there might have been a little bit of an anomaly on the new listings for October, and now with November. Seasonality, people being a little bit intimidated by the holidays coming up, maybe not wanting to list. Hard to say exactly what's driving that number, but it is the lowest number on record, at least going back for the past 5, 6 years.
It almost looks like some of those October listings were
Yeah,
pulled forward from
yeah,
November. Like
yeah,
people were like normally who would list in November just did them earlier. I don't know.
yeah.
Odd. Maybe it's the way the days of the week fell or something weird like that. All right. Inventory barometer. So this is something Lee came up with. It's the most real-time stat for if you're a seller, you're a buyer, you're thinking like, do I list now? Do I buy now? Where's the market heading? And a lot of the stats we just went over are trailing indicators. And so this one's a little bit more real time. And what you'll see here is the number of new listings week by week. So we're doing this every week. The number of pending sales for the week, and then what that ratio is. And if you map that over here, you can see the 100% line. And so these little areas where it's below means that they were selling more homes than were coming to market. So inventory was going down. And the rest of these areas where it's above that line means we had more new listings than we had pending sales. So inventory was growing. So Lee, I'll let you take it from there.
Yeah, so kind of alternating, if you will, week over week, a little bit up, a little bit down. Basically, a good indicator for equity. We want to keep our equity at least stable, and so rapidly growing or even gradually growing inventory can erode some of the equity depending on how the market is really balancing out. But David, for the past year or so, we've been going one step deeper. I put this together during COVID when we were really just trying to figure out what the heck is going on. And it was very helpful day to day to see that supply demand, new listings, pending sales, and it really was a way to stay on the pulse of the market daily. But over that time, there's been a new dynamic. And if we go to the next slide, the withdrawals and expireds have really been the untold story of the Austin market. All of the weeks that are highlighted in yellow are a net retraction. So in other words, if we look at the past 6 weeks, and we're recording today on December 15th, so I went ahead and included the most recent stats for the first 2 weeks of December, you can see that, there's been maybe an average of somewhere around 100 listings a week being withdrawn or expired, and that's clearly pushing the net result down every week, and that's been going on since August. So again, in my experience, having worked through real down markets where if you're forecasting a list price based on closed sales, you're adjusting for time in a downward direction because the values have been slipping, that glut of listings is what drives it with the absence of demand. This is the other view. This is the yin to that yang, where basically as the inventory continues to retract from a real standpoint, it just creates pent up opportunity from a volume standpoint and a value spike standpoint. So as long as this number keeps going down, it's just, in my view, adding fuel to the fire that I think we're going to see in the spring. And in some pockets, some significant price jumps, David, is basically what this is indicating to me as we get into the first quarter of next year.
Lee, I've got a very important question here. What is going on with the nines and the eights? There's something fishy here. I think we need to buy lotto tickets for 9889. I'm getting a good feeling about this.
Numerology is not my specialty. However, I was born on Friday the 13th. And so I'm not sure, but we can shoot some craps and cover some numbers and see what we can come up with here.
Yeah. Okay, so here it is when you take into account the expireds, what that chart looks like. It looks a lot different than the previous one, right? Where here's the net line. So inventory decreasing primarily over the past couple months.
Yeah.
So very
just
interesting.
Another indicator.
And then another visual of this, which I think is interesting, and here red is pending sales, new listings. So you can see new listings coming down as we saw in some of the other stats, and pending sales is pretty steady, came down a little bit these last couple weeks, but holding much steadier. So it'll be interesting to see what happens as we get into the new year. I imagine these pending sales will pick up. We might see new listings pick up as well, and it's just a matter of which one picks up more.
Yeah, what we're really looking for, if you go back 2 years, the pending and actives moving in the same direction with nice velocity upwards and maintaining a relatively close gap between the two as opposed to previous years. I think that's going to be the pattern, and it's going to be a question of what is the trajectory, and then that's going to translate to pricing and value. So, like I said, pent-up demand has been a theme that we've been, talking about for several months, and I'm just looking at fuel being added to the fire when I look at this particular dynamic.
And mortgage rates, I think probably the most important thing to this real estate market these days. Maybe it usually is, but it doesn't seem to be the overhanging, like, hey, when are rates going to come down? So currently 30-year fixed rate is at 6.22%. You can see where that is on this 52-week range. We are on the low end of that. And, hasn't really changed much in the last week. Lee, any thoughts here?
Well, we've talked about, political pressure, market forces all pushing for a reduction in the mortgage rates. And I think there's a pretty good chance that we're going to see that. If we can be consistently under a 6% average headed into 26 and through the year, and maybe that chips away a little bit as we get into the second and third quarter. It's all, again, just kind of feeding that dynamic of increased volume as well as the potential for price appreciation in the new year.
All right. Well, thank you for joining us. You can always find us back here. If you have any questions on anything we went over today, please comment below or shoot us a message. We'd be happy to chat with you more.
So, David, it's our final report of the year, and just want to say thank you to everybody who tracks these reports with us, people who kind of follow our analysis of the market. We appreciate that. To be honest with you, David and I do this for our own education and information so that we can speak from an informed place when we're talking to our clients. But just want to give a shout out to everybody that's along this journey with us, and thanks so much for tuning in.
Thank you, everybody. Happy holidays, and we look forward to chatting with you in the new year.